Is investing gambling? For so long, I've been asked a question. I used to get it a lot more than I get it now, but when I first started in the investing business, going to church, I would have old timers come up to me and say, I think investing might be gambling, and I don't know if I need to be investing or not. And what I would do is I would try to explain to them about risk versus reward. And it kind of goes like this. Gambling is taking on a whole lot of risk for a gigantic reward. And usually the risk is so extreme, you have a very small opportunity to get the big bucks. And when I was telling them, I said, we take risk every day as Christians. When you go out and check the mail, when you're walking out to the mailbox, the risk is that you could have somebody run off the road and run over you and you could die. The reward is that you may get a good piece of mail. You may get a check in the mail. The rewards is not very much walking across the street to check your mail, but the reward may not be too much also. So the risk and reward is what gambling is all about. And it's investing, on the other hand, is taking calculated risk for a good calculated return. And so many people initially, years ago, didn't understand that. And Grayson Shaw is an investment advisor with Christian Values Investing. And he's been going out, talking with people. And how often do you run into that question, Grayson, is investing gambling?
It's not all the time, but it's enough to where it feels like it's something that needs to be addressed.
So, Grayson, what do you tell people when they ask you, is investing gambling?
Yeah, I guess you've got to kind of nuance it a little bit. For instance, if it's a business owner, you would say, well, didn't you take any risk when you started up this business? Wasn't there a possibility that you would fail? And then oftentimes the answer is, well, no. I mean, I knew what I was doing. I was taking a calculated risk to be able to come out here and mow these yards and make the money that I knew I was capable of making. In a lot of ways, investing is the same type of way. You take the calculated risk, and you know what to expect some years if it's a bad market, and you also know that if you stick around in the long run, the odds are you're going to end up on top.
So investing is not just rolling the dice, is what you're saying.
That's right.
So many people think that's what you're doing, but what you're doing is just taking this calculated risk. You're looking at, maybe if you're investing in stocks, you got to do your due diligence. You got to see what the company is doing. Is it making money? Is it growing? Do they have a good product that they're selling? So really, with investing, you got to kind of do your homework.
Oh, yeah, for sure. You absolutely don't just want to put money into anything, because there's a lot of garbage out there, to be honest with you. For every stock that's really good, you're going to have another one that won't do well at all. And it's important to be able to either do a lot of homework and be able to do a good job picking out stocks yourself, or go to somebody who you trust to be able to manage it for you.
What do you think, Grayson, when people ask you, the stock market is so high, there's so much investment risk, I think, right now in the market. How does that compare to what the S&P 500 maybe have done since its inception? Because, every year there's always a time where you say, this is not a good time because it's too much risk involved. What does your research say about all that?
Yeah, best answer to that, I think, is we've got a picture out there on the wall, and it goes from 1934 to 2011, and on there it shows the insane amount of growth of a $10,000 investment to about $64 million. And the funny part is, on there it's got something every year for why you shouldn't have invested. And that's what we like to tell people when they say, it's not a good time, because it's always not a good time. There's always something there's always some sort of risk that you're going to have to deal with. But if you're willing to ride it out, the reward is eventually going to come.
That's right. So it's really what you need to be doing is calculating your risk, maybe following the biblical financial principle of steady plotting. So if your timing is not just right, if you bought at the worst possible time, maybe when it sells off is to add a little bit more money to it. So you start lowering your risk down. And is there anything else that are you telling your clients about investments and versus gambling? Is it gambling? What do you think about a person that comes to you and they say, Grayson, I want to make money real quick, and I want you to maybe buy me some options or something like that. What do you tell them?
I'd probably say that's not very wise, especially if that's what you're going to spend your life savings on, because there's a good chance that you could lose it. The Bible is pretty clear about how getting rich quick isn't the way to go, and just taking that incredible amount of risk just isn't wise. It's not being a good steward of what God's given you. I mean, just imagine having $1 million and losing it all in a day because of one bad decision. That's not smart at all.
I'm going to tell you a story that is true. It's back in 1990. It was during the Persian Gulf War. The Persian Gulf War hadn't yet started. We had armies we were building up in Kuwait to fight Iraq. And United States was saying in January we're going to bomb Iran. And so I had an attorney come into my office, and he just won this woman a settlement in a lawsuit. And he said, I want to help this woman get rich. So all this money that I've won in this settlement, I want to buy put options with. And the market had already been kind of getting hit and beat up pretty good. And I refused to do it. And so he went to my manager, and my manager overrode what I said and said I had to do it. And when the Persian Gulf started, when the bombing started, the stock market took off, and it went extremely high. And that attorney, lost every penny that he had put in to those options. And so he ended up losing all his clients' money. And so what he was doing, he wasn't investing, he was gambling is what he was doing. And I got off the hook about it because I resisted. I wouldn't do it. So investing is not gambling, but you can make investing gambling if you're not doing the right thing. Anything else before we close this, Grayson?
How much money was it? Can you say?
Yeah, it wasn't but about $14,000, but that's all the woman had. I mean, she won that in that lawsuit. He won it for her, but she lost everything she had. She didn't seek wise counsel, and she gambled away everything. So just be wise in what you do. Take calculated risk. Call your financial advisor and make sure what you're doing is the right thing. Until next time, may God bless you.